Joining me now for more is Lauren Seidel-Baker, economist at ITR Economics. Lauren, great to have you on the show this morning. And I mentioned that with the government shutdown, we're not getting as many data points released by government agencies. As an economist yourself, what is the data that you have telling you about the state of the economy?
It's a frustrating time to be an economist. We are as good as the data we can get, and that government data has historically been the gold standard. So we are still reaching out. Even before this shutdown, we had been starting to get concerned about some quality of the data with the BLS, for example, all of those federal layoffs. More and more data points were imputed rather than collected as they had been in the past. So even before this most recent round of shutdowns, my organization, ITR Economics, had been looking at other data sets, what typically comps well, right? Where do we see good correlations, whether that's private data, especially with things like payrolls, or are there just other proxies that we can get? Maybe we can't get to the exact data set we're looking at, but is something like square footage of floor space started or electricity consumption, is that a good proxy for activity measures? So we always do some amount of that. We have tens of thousands of different data sets in our database, and we're hoping that this shutdown does eventually end. But even in the midst of it, we are set to get some of those delayed data releases. So we have our fingers crossed for those to come in soon.
You know, it's interesting. Many market watchers have said that the theme of this year is uncertainty, and certainly at times volatility, but uncertainty around trade policy. In April, we see some of that creeping back up. Now, the government shutdown adding uncertainty without any imminent pressure to really reopen, with, of course, that October 15th payroll date coming, where some federal workers could, in fact, miss a paycheck due to the shutdown. What does this tell you about growth, this uncertainty? Is it strong? Is it sluggish? How would you categorize it?
So growth is absolutely sluggish. We had seen that for a broad number of reasons, just due to where we are in that fundamental economic cycle. I think the uncertainty is causing more delays than anything else. So we still do expect growth. This is, I want to be clear, sluggish growth, yes, but still positive growth. This is not a recession by any means. And so as we're seeing that macro cycle start to pick up, all of this uncertainty is kind of adding a wet blanket effect to the level of growth that we could expect. So we are still seeing momentum. That momentum is just being very, very slow to build, as even though there is still uncertainty out there, businesses and consumers, I don't want to say they're getting numb to it, but they're finally accepting it. They're saying, I still have to go forward and run my business or live my life, even though I don't have perfect information. So I think we're getting to that inflection point where people are still moving forward. But again, that pace of growth is nothing to write home about this time around.
How does that factor into your expectation, Lauren, for rate cuts? Of course, the next decision that we'll get from the Fed is at the end of October.
Yes, so we saw in a lot of the Fed messaging that the general expectation is still a downward trajectory in rates, but again, very muted. We see the two sides of that dual mandate in conflict right now. So while the labor market side is getting much more attention, getting talked about a lot more, I'm personally much more concerned about inflation ramping back up. We're starting to see those early signs, not just for tariff-related reasons, but for very fundamental reasons. If you look at both monetary and fiscal policy, if you look at wages still picking up speed, electricity costs, energy costs are a big one. There are fundamental reasons that even if tariffs went away completely tomorrow, that would not mean that inflation is coming back down. So I think the Fed has to be measured in what they do. And I think the deeper we get into this year and certainly into 2026, the more limited they're going to feel in terms of how many more cuts can come through.
Lauren Seidel-Baker, economist at ITR Economics. Lauren, thank you as always.
Thank you.